Hey, this is Chris Creekmore Realty Group at the coast of North Carolina, joined with Vince Bacchi, and we are talking about bridge loans. This is a potential solution to a problem. So, part of this webinar series that you see on our website, Creekmore Realty Group, is making the buyer aware of opportunities or the buyer aware of solution solving issues. This one is a solution to a when you want to purchase property while you're trying to sell the property that you're living in. So I'm joined by Vince Bacchi. Vince and I go way back many years, and Vince is with Intercoastal Mortgage. Hello, Vince. Thanks
Good
for
morning.
joining
Good
us.
morning, Chris. Happy to be here.
Happy to have you. Vince is a very reliable resource and a great person to talk to and to manage your loan. One of the products that his bank, Intercoastal Mortgage, or his lending institution, offers is a bridge loan. So let's talk about that, Vince. So the bridge loan is ideal when we're trying to bridge a gap, and that gap is a buyer for new property, let's say in North Carolina, also want to sell my property in New Jersey. So I've got to close on both properties, and there's a gap of time in between closing on the North Carolina or the New Jersey property and closing on property in North Carolina, as an example. So it's the period of time between closing current house and moving into the new house. So if the bridge loan, Vince, is a solution to the problem or scenario of we've identified a house in North Carolina, but I've got to sell my house in North Carolina. Tell me about a bridge loan. What is it, and how is this potentially a solution?
Sure. The simplest explanation for a bridge loan, it's a bridge loan is a short-term, interest-only loan secured on the property to be purchased. A borrower will need the down payment and closing costs, which is about 20%. Down payment is 20% on a primary home purchase or 30% on a second home purchase. The bridge loan underwriting is considerably more liberal than standard conventional loans and is much easier to qualify for. We do not count your mortgage payment, taxes, or insurance on your current residence when we're calculating debt ratios. So where you might not normally be able to qualify carrying your existing house and buying a new house at the same time, a bridge loan makes that a whole lot simpler, and it usually works.
And I think the key to make here is it's not secured on the home that you're living in that you may want to sell. That would in essence be an equity loan.
Right.
Uh,
That's a home equity loan, right? This is
yes.
on the property you're purchasing. It's secured on that property, and it's a short-term, 6-month, interest-only loan.
Okay. So let's talk about a little bit more detail of basically pros and cons. Is really when does a bridge loan make sense and when does it not? So that's really the pro and con. Pro makes sense, con doesn't make sense. So if we're considering a bridge loan as a solution, I've identified a house in North Carolina. I want to buy it because there is certain features of that house that are extraordinary. It meets my needs. The likelihood of another house exactly like that coming on the market in the next 3 to 6 months may not be possible. This is the house that we need to get. But um, it's winter. I don't want to put my house on the market in New Jersey until the snow thaws. So the upside is you buy your next home without a contingent offer. So let's talk about that for a moment. Because sellers here in North Carolina and really across the country, they do not want a contingent loan, so or a contingent contract. This would be that the client who's applying for the bridge loan is getting a loan, so the contract would be contingent upon the loan, but not contingent upon selling what they have
Right.
in New
It
Jersey.
takes that contingency off the table. So there's no reluctance on the seller's part to accept the offer because you have a good solid loan product that your client is going to get and be able to purchase this house. No contingency.
So it would strengthen the position of the buyer in a seller favored market where sellers are not looking for contingencies of any kind, and it would make the buyer's offer stronger in the event that there were multiple buyers for that property. Um, so it comes into play mainly. I ultimately need to sell my house in New Jersey, but I can't do it until after I move into the house in North Carolina, which also the pro is this is where you can have a simultaneous move and not be homeless for a period of time, and such that you don't have to rent.
Right. Or you can move at your leisure. It's not a double move. A double move is very costly. Everybody knows that. It's not free. So this eliminates that issue. You can move into the new house at your own pace.
So yeah, avoids the temporary housing. So again, a bridge loan serves a purpose of um, simultaneous move, or like Vince says, at your leisure, gives you the flexibility of that, prevents the necessity of renting other property while you're waiting to for your New Jersey house to sell potentially, or also um, having to put your stuff into storage, which is also extremely expensive. So when
Uh,
does it not work? When does it not make sense?
well, it may not make sense if you can't afford two payments at the same time or pay that house in New Jersey, let's say, and the house down here, because you're going to have a payment, interest only payment on the equity loan, the bridge loan for a short period of time. You got to be able to handle both payments for a while. Um, and it requires decent credit, 700 credit score, and that 20% down plus closing costs for a primary residence. So, I mean, and the fees and the rate on the bridge loan is a little high. It's right currently 8 and 5/8%, but you're only going to carry it for a short term, and it does eliminate those other costs, like Chris said, of going out and finding a rental property and then moving twice. So it makes up for that in that sense.
So, thinking it mathematically, and we can, add this onto our description of the webinar after it's recorded. So, a conventional loan today, let's say 6%, somewhere.
Yeah, give or take six, maybe a little higher, a little lower, depending on what you're doing and your credit score. So, right. So this is a little higher, but it's interest only, and you're only going to be in it for a few months. The idea is if your house is not going to sell in New Jersey and it's in a bad area where it's not going to turn over, you're not going to want to do the bridge loan because this bridge loan is a 6 month short term loan. If you're confident that your house is going to turn, then this bridge loan is for you. But
So, it, okay, so if I'm going to rent, let's say I want to rent something down here and I'm going to rent, well, first of all, renting is possible here in the coast of North Carolina.
expensive, but expensive.
If you want a house to rent, you're going to be over $2,000 a month. So that is a dead expense. And then you'll either move your stuff into storage or into the house or both. So then you've got that expense also. But although it may be costly, you are eliminating the cost of having to rent something either in New Jersey or in North Carolina, and also just um, the ease of moving into the new house. Why are things at a convenience store more expensive? Because they're
because they're
convenient.
convenient.
Same thing with a bridge loan. Okay, maybe it costs a little bit more, but it surely does take off a lot of stress.
Yep.
Again, like Vince says, if you're not um, strapped and you can make two payments for a short period of time.
Chris, another point that we overlooked is that the person wouldn't be pressured to accept a lowball offer on their New Jersey house just to get out of it. They can sit back because they're secured on this end and sell the house at the proper price. So chances are you're in a better position up there as well. So that's a big plus.
And it's easier on the seller to list and sell the property when they're vacant rather than having to, okay, I've got three showings today. I got to go, let me go shopping for 3 hours or whatever. So it's a lot, you know, easier on the seller of the New Jersey property, i.e., the person who's getting getting the bridge loan. So strong credit. So we're talking about a minimum credit score of what?
700.
Okay. And adds financial complexity and risks if timing slips. Talk about that.
Well, it's a 6 month loan. It can be extended for another 6 months at a small cost, a nominal cost. But we're not doing these as long term loans. We want people out of these loans. So you got to be fairly confident that your home you're selling is going to sell.
So again, for those of you who are viewing this webinar, it's an excellent solution when I'm not ready to sell my house and wherever I live, but I've identified something that works for me. And this is a solution to bridge that gap in between the timing of selling the current home and purchasing the new home, such that you can, have more of a simultaneous move, or as Vince says, move at your leisure. Um, so just running through this in a little bit more detail, bridge loans work best when you have significant equity in a home. Your current home is expected to sell quickly, certainly less than 6 months, because ideally, although like you said, Vince, you can extend the loan, but ideally you want to just, if your house, talk to your realtor. I always advise my anybody watching this webinar, talk to the realtor who's helping you, ultimately helping you sell the home wherever you're currently living, such that you get a full grasp of what is realistic in today's market for selling your house. Ideally, something that will sell, you list it, definitely will sell it less than 6 months, but ideally less than that. Um, you found the right home and you can't afford to wait because this is the right house. Um, Market conditions again favor the sellers. So if it was a full-on buyer's market over here, which here in the coast of North Carolina, for those that are watching the webinar, we're not a full-on seller's market and we're not a full-on buyer's market. We're right kind of in that sweet spot. And I can tell you in my experience of doing, we did over 100 transactions last year, and there's not a one of them when I talk to them about, hey, would you consider a contingency, that they jump up and down. So when I say contingency, meaning a for sale contingency. And certainly you have stable income and financial reserves. So, so you want to avoid this kind of loan if you've talked to your realtor and it could possibly take less than 6 months. Um, Cash flow is tight, meaning you're going to have to make a payment on your current house unless it's debt free. Does that change things if the house that they're selling in New Jersey is debt free?
No, if they were doing a normal loan, you'd still count taxes and insurance. So, in some of these other states, taxes are high, so it's considerable debt to the debt ratio, and we're not counting that in this bridge loan. So, you know,
Yeah.
uh, if your house you're selling is valued and you don't have a mortgage on it, it's valued less than the house that you're buying, you can still do this bridge loan. But when you get to the end and you sell the house, you're going to have to bring assets to the table to pay off the bridge loan. One way or the other, bridge loans has to get paid off. A combination of assets and equity in the house is fine, but that's got to be part of your plan. That's a question we would ask when we're taking the loan application.
So ideally, I'm my house is in New Jersey is worth 800. The house that I'm trying to buy is 600.
Yeah, I mean that's perfect scenario, but you could be, you own your house is worth 500 and you're buying a $600,000 house down here, and you're going to have to come to the table with another 100,000, but you just couldn't make this whole thing work if you were trying to do a mortgage on it because you wouldn't qualify, let's say. So this would work. You just have to make a contingency to bring some assets to the table, some cash to the table on top of the sale. So
Yeah, yeah. So thank you, everybody who's watching this webinar. If you want to have the exact questions for your scenario answered, Vince Bacchi is an awesome resource. Well, this webinar is recorded and all his contact information is available. And you can find this webinar on our website, the recorded version on our website, creekmorerealtygroup.com or retire2nc.com. So just kind of wrapping this up, in summary of this loan, a bridge loan is
a short-term interest-only loan to bridge the gap between buying and selling your current residence.
and the loan purpose is to bridge a gap. I've identified what I want to buy in another uh, area, let's say, or another state, and I'm not ready to sell my house in wherever I'm living currently.
Right. The terms of the loan are a 6-month interest-only loan. Simple interest. We don't collect taxes and insurance in the payment, just interest on the money that is borrowed. Uh, Another question you might have is eligible properties. Single family homes, townhomes, and condos are eligible
And a
for
vacation home could be eligible. It's just the qualification will be higher, like it would be for anybody.
right
Uh,
30% out. We don't do
yeah.
bridge loans on investment properties. So if you're buying a property as a rental property, we don't do a bridge loan on that.
So minimal down payment. Now I already need 20% to qualify for the loan. Is that what we're saying?
Yes, and if it's a primary residence, if it's a second home, you'll need 30%.
Okay. And need a minimum credit score of 700.
Correct.
Okay. And the debt ratio calculations is more lenient
It,
because
it's
we're
almost
not,
not, we collect income information, but the debt ratio calculation does not enter into an underwriting decision. So although we're collecting the information on income, we're not making a calculation for debt ratio. So that's why if you have the down payment money and the closing costs, basically you're going to qualify for this loan and the credit scores. It's
so
easy to qualify.
most of the people that we work with, Creekmore Realty Group, we're working with people who are relocating out of state. And the general scenario is they work with myself or somebody on my team. We identify the right community, we identify the right area, and sometimes we see a house that's like, wow, I never really realized I would see a house like this. I know I'm going to move, but I see this house and this checks all the boxes. If you didn't apply the potential of the bridge loan, then you would need to go back up to New Jersey, get your house ready, put it on the market, and then hope that a like kind comes on the market afterwards. This is a solution for somebody who is has identified um, the the right home, checking the boxes. Vince, you are an outstanding individual. You cook the absolute most awesome um, standing rib roast that I've ever had in my life. And thank you for joining us. Anything you'd like to add, Vince?
No, I just love to help your clients out with bridge loans. I actually have three bridge loans closing in the next month. So, I mean, they work great. There's not a lot of lenders that offer bridge loans. You know, most of the local banks do not. They'll offer home equity loans, which is a completely different animal, but they don't offer bridge loans. So it's kind of unique to us, almost unique. And I love doing them. So they're easy to do. I closed a ton of them in 2025, and I'm looking to close a ton of them in 26. So bring it
Yeah,
on.
yeah, awesome. Yeah, Vince and I've been working together for a lot of years, so we'll keep that train rolling. Again, an equity loan is on the property that you are is not on the market. You cannot do an equity loan on a house if you intend to sell it or if it's listed for sale.
That's
And
right.
a bridge loan is on uh, the property value of what you are buying.
Right. The other note to make, Chris, is that on equity lines, some of the banks are limiting how much cash out you can take. So they'll not, if you won't have an $800,000 house with no mortgage on it, they're not likely to give you $600,000 cash to walk away with. So they've restricted that over the years. I mean, they may have $100,000 limit or $200,000 limit. It's not going to satisfy you. Our bridge loans go over 1 million. So, I mean, considerably over 1 million they'll go. So it's completely different lending animal than what you're talking about.
So the point is for those of you that are viewing this, you're going to move. Hopefully, it's to the state of North Carolina here at the coast where my team can help you. But you have questions in terms of what is the best solution and strategy for you in purchasing the new home. Call Vince Bacchi. He has been doing this for eons. He knows all the products that are the best product for you. Bridge loan is just one of the solutions that Vince and his lending institution offers. So write his number down, save his number, send him an email. He is an awesome, awesome resource.
Thanks,
So,
Chris.
again, thank you, Vince, for joining us on this webinar. We are Creekmore Realty Group. If you got your phone, you can scan that QR code. It'll go to our website. We have two websites, nccoastallivinghomes.com. That's our home search website. And then if you want to learn more about us and our team and how we help people relocate from one state to another, that's what we specialize in, Creekmore Realty Group. You can go to creekmorerealtygroup.com or retire2nc.com. So thank you, Vince. Thank you, everybody who's watched this webinar. Again, it's recorded and it'll be on our website to review at another time. Thanks, Vince.
Thank you.